Newsroom. I'm Pavithra. With me is Sonal, and we are very excited to have Kalpesh with us here in the studios.
Thank you.
Kalpesh, as always, thank you for coming down to our studios. It's always nice to have you here in person. And today we're talking about international funds, right? Which is a very interesting place, space to talk about. We get a lot of questions on this as well anytime we throw it open to our audience. So there's so much to discuss, whether it's the advantages, the disadvantages, what the returns have looked like, and also how do you really go about designing a strategy in this place?
And how much of it should be there in the portfolio as well, right? Because it does come with a lot of its risks and confusions as well. So Kalpesh, welcome to the show. So that's the first question. What do you think about international funds? Now, there is also a cap in place to limit the Indian equity exposure or Indian investors' exposure to foreign markets. What is the permissible limit, first of all? And also, since most of these funds have already hit that cap, how do you go about it?
Yeah, so first of all, thanks a lot and always a pleasure being here. So we talk about international funds, and that's always been, like a topic to discuss whenever the word mutual fund comes, and domestic versus international and all that stuff. So first, starting off with the limit, what happened was that when international funds started, it was going very smoothly and everyone was investing in, the excitement levels were there and all those things. Till I think the RBI put a cap on it, saying that up to a limit of $7 billion once you hit, then further investments cannot be added by Indian mutual funds into this particular category. So all the AMCs had to rework and look at where they are, and then it came to a grinding halt. And post that, we know there was a lot of international turmoil and plus this limit. So everything for a moment came to a standstill. So that $7 billion limit was hit. Now what happens is that presently all the funds which had their exposure to these stocks overseas were doing a little bit of churn and selling and buying and all that thing. And in that particular thing, RBI said that the amount or the allocation which you redeem, you are allowed to reinvest that much portion, and it comes back to that much allotted amount, so you don't exceed that thing. Certain funds which stuck their neck out and probably didn't do any churning, so they are where they are, and their holdings persist. But certain funds sold, and they have again created that gap for them wherein they are still taking subscriptions for people yet to do it, but again with a caveat that the moment it hits without any, I would say a warning or a horn, they would just simply stop the whole fund further thing. Plus, there is also another limit of $1 billion kept separately, which is for ETFs. So there are two separate avenues, and that's still not been hit. So we still have room in that, but then ETF is a different way of looking at things, and although it's a part of the mutual fund family, but it's a different ball game altogether. So that is where we are right now.
Okay, no, that's very important to talk about just as we, start this conversation to put that on the table. But Kalpesh, take us through what you see as the key advantages here. I mean, I know this is an exciting space. Anyone would want to say that I have exposure to the US market, and there are only so many ways that you can go about doing it. So what are the advantages, and who do you think this is well suited to? Because it's definitely not for everyone.
Absolutely. And the word international funds, when it comes, it adds a different dimension to a person's portfolio.
Yeah.
So first and foremost, if mutual funds stand for diversification, international mutual fund stands for overseas diversification. That's the core differential here. Yeah. So if you have all your exposure right now to the Indian markets or the Indian shores, this takes you abroad and gives you a divergence into the equity markets or whatever it is overseas. Yeah. Second, it obviously acts as a different currency hedge, or people who would want to have financial goals. I would say, being a financial planner, I can't escape the word financial goals. Based abroad. So for their children's higher education, if they want to take an exposure into a dollar-denominated investment or something, it's good for that, because that purpose is going to be overseas. Third, obviously, you can't have a country-centric portfolio. Many people say you can, you cannot. That's a debatable thing. But if you want to have a different, type of a exposure to either emerging markets or to developed markets, this gives you the best of both. This is, we're talking only the pros right now. So
Yeah.
let's look at that. The other aspect is obviously the global investment opportunities. If we are the emerging markets, a lot of work is being done in the developed markets. Lots of new avenues are coming up and lots of new themes are coming up, like climate change and artificial intelligence, and you name it, and it's there, which is still not evolved and come into our Indian markets as yet. So people who are answering your question, who should take, evolved investors should only look at international funds.
Yeah.
So if you ask me as a financial advisor or a planner, once create a strong India-based mutual fund portfolio with all the nitty-gritties in place. So your large cap, mid cap, small cap, have your SIPs on, and then if you have surplus, if your needs, your goals are there, then you can take an exposure, and again, not more than probably ideally 10 to 15% of your portfolio.
No, it makes sense, right? Because it's sane advice, something that is not just used in a normal lingo here, but is actually seeing execution there. That's how you get exposure there. But of course, people who have seen that evolved idea of investing there should be there. But how have the returns been in the last 5 to 10 years?
It's very varied as such. And global markets do what they have done.
Yeah.
And in fact, if you see the returns, we've just given it here, we've given a 1, 3, 5 and a 10-year range. Now, this is across the category of international funds. Okay, so overall, the category has delivered in the last 1 year around 15%. In the 3-year category, 5-year category and 10-year, it's more or less in the 5 to 6% range. But in that 1 year, we've seen that the US-based NASDAQ, the tech stocks which are there, they've performed like outrageously well.
Yeah.
And if you were to decipher that, the NASDAQ funds or the FANG funds, they would have given a return of anything between 30 to 50%, which is a complete outperformance. But then that is not the only criterion. Because in that, if you see the other US, the broader markets would have given half the returns of that thing. So 1 year returns have been good.
Yeah.
And in fact, even our returns have been good in the last 1 year. But over the period of time, I personally don't see there's anything very exciting over a 3, 5, 10-year period for which we generally as investors invest. So we don't invest it for a 1 year or 2 year type of a thing.
If only it was as easy as looking at the 1 year return and putting your money in, right?
That's
But
impossible to
it's
do that.
impossible, and it's unlikely that you will see that same performance
Absolutely.
year after year. But Kalpesh, we've spoken about a lot of the pros of investing in international funds. Take us through the risks, because as with any equity fund, these have all of those risks, but they also have some additional risks, whether it's geopolitical, currency, all of that.
Lot many. I think lot many. And now this is a very personal opinion, and obviously many people would concur or not concur with it, is that, the level of, I think, transparency which we as Indian mutual fund investors have today on digital platforms or, media or actual physical fact sheets, what we reach.
Pretty high.
And pretty high. Yeah. And it's very transparent. And now 10 years into the mutual fund industry, people have now understood what is an NAV, where is the industry going, in which sectors are you investing, what is the market cap definition. Whereas the same thing, if you were to put it in international funds perspective, I think even if you go and open a fact sheet today, it would just show you that it invests in a fund of funds. And there's nothing more beyond it. Sometimes the fund of fund data is not updated. As much as I'm just giving a point-to-point comparison. So a simple investor who would just like to say that for the investment purpose, I would simply like to invest in a overseas mutual fund or an international fund, I think he would face a little bit of a roadblock. Secondly, you are, like what you rightly said, you are subject to many geopolitical risks.
Yeah.
Even those currencies have undergone a lot of hammer.
Yeah.
Right, that it's not only the cliched Indian rupee depreciation thing. Many currencies have collapsed and things have happened. And other part is that you are completely at the beck and call of a foreign fund house or a foreign fund manager per se. Now, as I talked of evolving, today we are on the brink of even knowing the fund managers who's managing my money in India. And we do that type of a little bit of a history or a reading that who's the person handling my money.
Provides a lot of trust, right?
Absolutely. And this is all, investing is all about trust, ultimately. So that's why we say that, okay, you take a call up to 10%, 50%, no problem, and put your money there. but understanding the risks far more deeply than you would understand Indian market risks. So it comes with lots of other, I would say asterisk marks you have to go through before you put your money there.
Of course. And you mentioned fund of funds, right? So most international funds, they either invest via fund of funds or they would do it through a feeder fund.
Feeder fund.
But there not be much adequate information, as you were pointing out. You don't know the fund manager there. You can't see them personally. But a lot of other information that would not be available as well. Is that a cause of concern?
Yeah, absolutely. So even if you say that, the companies, let's move on to the companies. Today, an evolved investor who wants to put his money here would know those companies where they exist in India, what they're doing. He would be able to read their balance sheets and take a call. Be it an extremely new age company or whatever you call. But there, again, that type of a little bit of an ambiguity would come. And what do we do in mutual funds? Let's be honest and ask ourselves. We trust the acumen of a professional fund manager and hand them over our money. That's what mutual funds all are about, Yeah. So here the question is that you are then going at 1 + 1 + 1. So not that they're doing anything wrong. In fact, they're doing it and in far more developed markets. So US, you can't compare the magnitude of evolvement of mutual funds of US with India even today. But here we are talking about parting our money on those shores. So, but still, give and take, I think this is still a better bet for people who would want to invest abroad rather than investing in direct stocks overseas. So still, you could buy, an index fund of the US rather than, taking a call on picking stocks. Now that's for a different level of, HNIs or something who have that type of research or people at their beck and call to do that. Otherwise, still, that mutual fund route is better.
Yeah, no, I absolutely take your point, and anyone venturing into the space needs to know all of the risks that this comes with, and that you will not have the kind of information that you do when you invest into Indian mutual funds. But we were mentioning earlier how the 1 year return has been good, but if you look at 3, 5, 10, which is typically what we think is a better, kind of time frame to invest for, what do you think is a minimum kind of time horizon you should look at when you invest in an international fund? Is it 3 years, 5 years? What would you suggest?
It's a very tricky question, because once you put that question to me, normally as an investment expert or whatever, we do equities, the answer is long term.
Yeah.
But here I would take my words in a very measured way, that this is actually more of a tactical call. Apart from obviously the caveat that it's a long-term investment in equity, it has to be long. I'm not denying that. But the time frame, because here you are trying to go on a bet that this country, this theme overseas will do well for a period of time. And you're trusting someone's advice that it might do well for 1 year, 3 years. There's a certain boom or a bust going to happen, so take your calls accordingly. So it then goes into that, a very medium-term time frame. I'm not saying below 1 year. Below 1 year is not a benchmark to test anything. But it could be a tactical call. So it really, everything might not fall into how we say in Indian mutual funds that, you invest in large caps for 10 years or small caps for 10 years.
And then just forget about it.
And just probably forget about it. Here, you are going into a different territory, different theme. Themes are emerging. You don't know that something might not be actually on also, and your money might be there. Now we talk about certain emerging markets. What is the growth story? Beyond that, people have launched country-based funds. So there might be a Brazil fund or there might be a Japan fund. Now, you don't know what those economies are doing presently. And if you're doing that, then you're a highly researched investor. But how many of highly researched investors do we have?
Yeah.
Not that many.
There are many, and if they aren't so aware. We have shows here, we get experts here to make them understand it as well. But yes, the retail investors, they are reading a lot, they are well versed with what's happening, but international investment could be a little, it could be trickier, right? We'll continue this interesting conversation. We'll just get into another, the first break on the show, and we'll know all about international investing and funds on the other side of this very short break. Stay tuned. Welcome back. You're still tuned into Mutual Fund Corner. We still have with us Kalpesh Ashar, and we are talking everything about international funds and how we can invest in there as well. When, the time that we are talking about global volatility, but some stability back home. Would you recommend looking at, say, Hong Kong or China funds? Valuation are relatively very attractive there. China is almost half of what we saw earlier. Is that a space you would look at?
Honestly speaking, the way India is doing right now, I would purely say that India would be the first bet. And to an extent, the only bet. So the way the things are moving out, we're not talking about the economy right now, we're discussing international funds. And the way things are moving, I think the next 10 to 15 years is a great time to be in India as advisors, as investors. I think that's what it is. Now, coming to the international funds, obviously we talk about diversification, and if you want to do, where would you do and what would you do? The second bet and the only bet, I think, which would come to my mind is US. Okay. Leave aside the valuation part or where 25-30% and you're trying to grab an opportunity of capitalizing on that. I go back to all the statements I made in the first part. That what about the transparency? What about the things? And when you utter these two names of the countries which you just mentioned, I think all that goes for a toss. Now, obviously, these funds are managed very professionally and in the right frame and everything. Yeah. But as an investor, I would still come back and ask, what am I doing? So if I were to come back from a correction of 25-30% or something, can't I find an opportunity like that somewhere else? So why I'm talking about US is it still remains the ideal, the iconic place to invest. We all are still gathering textbooks and all those things from the US. And just by if you see the sheer size, pedigree, and the transparency, I think the only market I would invest today is US in the international fund category. And the simple reason it offers me the emerging trends, not just valuation. As an investor, I look for diversification, and it offers me all the transparency which I require. And just to put on record, Pavithra, is that we've seen these other country funds. Yeah. And if you see the 3 and the 5 year track record, I just pulled out some records. For a Brazil fund or a Japan fund, the 3-year record and the 5-year record is nothing more than a 3% or a 2% or a 5 and a 6% return over a 3 and a 5 year period. Now, if that's not a tactical call, what is? Yeah. So if I'm going to do well in 1 year, who's going to tell me that come out of it? Yeah. And I stay, and then the whole thing collapses. So for these meager returns, which are lesser than probably FD returns, why would I take such a big risk? Yeah. So even if you see certain China funds, over a 3, 5, 10 year period, they would not have performed or outperformed per se. Yeah. What you're saying, Sonal, is absolutely right. Is that an opportunity now? Might be. Yeah. But do I know the right time to come out of that country? So that probably would be my response.
Okay, got that. So you would look at US and perhaps skip these. It's just that, sometimes there are so many distractions because you hear that the semiconductor opportunity is huge in Taiwan. Absolutely. And you want to go in. Yeah. But I guess that is you have to measure what kind of risk you want to take on that front. One final question on the taxation, because there was a change announced in the budget. So just take us through how these are treated.
Very important, because what was happening is prior to this recent budget, obviously the taxation for international funds was the debt fund category, and it was the benefit of indexation was there. Yeah. But post this, I think it's now the indexation benefit has been taken out, and it's simply treated as on par with the normal debt fund taxation, which is no short-term benefit is there. Yeah. So people also have to keep this very important aspect in mind, that though you are investing in equities abroad, you're still under the debt fund taxation which is there. Which, unlike the Indian markets, we're still benefiting from the equity fund taxation which we get.
Okay, so taxation, of course, need to be considered as well, because it's the post-tax returns that come to the investor, right? Kalpesh, it's been such an insightful chat. Thank you so much for joining us, explaining us the different nuances of investing abroad, because it's quite tricky. So we need an expert opinion on that as well. Thank you so much for joining us. And with that, we'll take your leave on this edition of Mutual Fund Corner. But stay tuned for Closing Bell to take you through the last hour of trade.